in a range. Let's hope it's not headed down the south side, because I think after such a kind of a steep rally over the last 1.5 odd months, it's bound to be that the markets can get into an odd corrective phase here or there. But the market texture is quite strong. One of the major points which I was flagging off is that in the last 1.5 odd month, there were interesting amount of large cap names which had participated. Fresh large cap names, the likes of L&T, Bajaj Auto, etc., which managed to give signs of a breakout for themselves, lifetime high breakouts. But now in the last 1 week, the set of large cap names have dropped down significantly. So there are no major large cap stocks which are actually showing signs of a breakout. In fact, there is a consolidation for most of the large cap names, or a correction, the likes of Reliance, HDFC Bank. There are plethora of stocks in that category. So I think that's one of the reasons why the markets are taking a bit of a backseat. But again, a healthy consolidation hopefully, and if the correction gets arrested at 18,000, 18,100 mark on the index, that could be a good buying opportunity.
So profit booking was seen on a lot of heavyweights, right? Right from Reliance, ITC, Tamo. Are you in the camp which is suggesting to take profits off the table, or is it buying on dips?
So it's a mix of both, because it's more of profit booking from where positions you've gained profit, as well as shifting to the mid cap end of the market. So I think that's what a churn has to happen at every phase of the market trend, because we don't know that whether this could just be a short term correction or whether this could be a bigger correction at play. So we have to keep on watching those levels for the indices and how sharp the internals change, if they do, for the indices. So as of now, we'll plan for a mild correction, profit booking on the larger cap names, and then shifting to the mid cap end of the market.
And yeah, also need to watch out for the fact that it's not only Bank Nifty, which is just, a few points away from the life high levels. It's also mid cap index, which is less than 1% away from its all-time high level. So a lot of strength in the broader markets. But since we're talking about broader markets, let's get stock specific top recommendations.
So two buy calls. Sanghi Industries is one of the stock which I think is looking extremely charged up. Post results, the stock actually did not perform pretty well, but then today the stock showed signs of a breakout as well as a pickup of volume. So that's a buy on Sanghi. Targets of 85, stop loss at 70. And Policy Bazar has been one of the recommendations which I've been highlighting earlier, breaking past about the 620 levels, suggesting a buy. Targets of 660 for Policy Bazar and stop loss at 605.
So Sanghi Industries as well as Policy Bazar, two counters from the broader market space from Kunal. Thank you so much, Kunal, for that, and we'll let you go on that front.